The ability to contribute to super has changed a little bit with the introduction of a total super balance for individuals. I have with me Peter Burgess this afternoon to have a look at this issue and discuss what it might mean. Welcome, Peter.
Pleasure to be here, Darren.
So let's start by just exploring what is the total super balance.
The total super balance is the sum of your accumulation phase interest as well as your transfer balance account. So if you're in the pension phase, you'll have a transfer balance account from 1 July this year. So your total super balance is the sum of those two things, as well as any rollovers that are in transit, so that belong to your interest. You have to add that in as well to your total super balance. If you have an account-based pension, your transfer balance account is modified. So what they do is they take out all the debits and credits relating to that account-based pension and replace it with your current market value, the withdrawal value of that pension. They do that so that the balance more accurately reflects market value. So that's how they determine the total super balance.
So Peter, what effect will this have on people's ability to make contributions after the 1st of July?
Yeah, so the major impact here is around non-concessional contributions. If your total super balance at 30 June exceeds the general transfer balance cap, which will be 1.6 million from 1 July, it means in the next financial year you won't have a non-concessional cap. So your non-concessional contribution cap will be deemed to be zero. So if you do happen to make a non-concessional contribution, it will be treated as an excess non-concessional contribution and subject to the normal refunding rules that apply to excess non-concessional contribution. It doesn't impact on your ability to make concessional contributions though.
So of course, when we're talking about non-concessional contributions, I'm assuming there's an impact also on the bring forward rule that was quite popular in the past?
That's right. So it will be more complex as a result of the introduction of the total super balance. So you won't have the standard 3-year bring forward anymore. It will depend on what your balance was at 30 June prior. So depending on what your balance is, will depend on how much you can bring forward and your bring forward period. So we have to give up on the idea that everyone has access to a 3-year bring forward period. It does depend on what your balance is at 30 June prior. So in that respect, it will be more complex from 1 July.
So that means people will have to assess that balance on a yearly basis. Is that right?
Well, they need to know what their balance is at 30 June prior. So that's going to be critical, knowing what your total super balance is at 30 June prior, because that will then dictate what non-concessional contributions you can make in the next year. So we do face the prospect of some self-managed super fund investors entering the new financial year not actually knowing what their total super balance is at 30 June prior. That's not ideal, but that's reality. So they won't actually know what they can contribute perhaps until sometime into that new financial year.
Now you mentioned just earlier that the total super balance is capped at $1.6 million right now. There is also another concept obviously out there which has promoted a lot of discussion called the transfer balance cap, which also happens to be $1.6 million in its limit. How do those two work together?
Well, the two work together to determine your eligibility to make non-concessional contributions. So if your balance at 30 June prior, your total super balance at 30 June prior exceeds the general transfer balance cap amount, which is $1.6 million from 1 July, then you won't have a non-concessional cap. You also won't be eligible for the spouse or the tax offset for spouse contributions, and also eligibility for the government co-contribution. So the two work together to determine your eligibility for those type of contributions.
Now, very recently some draft legislation was raised to propose the inclusion of assets which have been purchased under limited recourse borrowing arrangements to actually now count towards that total superannuation balance. What sort of effect will this have?
Well, yeah, as you're saying, one of the changes that has been announced is that the outstanding loan balance at 30 June will be added to your total super balance. So that may push people over the 1.6 threshold, which means they won't be able to make non-concessional contributions, or they won't have access to a non-concessional cap in that income year. So you would think that's going to affect their ability to service that loan. If they can't make non-concessional contributions, it's going to make it more difficult, you would think, to service these loans. They'll have to rely on making concessional contributions and also any investment earnings that the assets of the fund are able to generate in order to service those loans. You would think it's likely to make it more difficult also for self-managed super fund investors to get finance, given that there's going to be questions around the serviceability of that loan. The one thing I would point out, though, is that this change only affects limited recourse borrowing arrangements put in place once these changes come into play. The one caveat I'd put on that is if you're renegotiating the loan, refinancing the loan, then it will, as far as we can see, trigger those new provisions. So whilst it won't affect any limited recourse borrowing arrangements already in place, if you do refinance, then it will re-trigger those new provisions.
Okay, that's very interesting, Peter. If you'd like to find out a little bit more about this subject, Peter Burgess will be presenting in a lot more detail the contributions, implications of the total super balance and other related issues on the SMSF Professionals Day. That's being brought to you by Self-Managed Super and SuperConcepts. It's beginning on the 17th of July and going right through to the 27th of July, and it's going to be hosted in every single capital city of Australia. If you'd like more information or would like to register, please visit www.smsfmagazine.com.au/events. Thanks, Peter. I look very much forward to finding out a little bit more about this subject.
Great, thank you, Darren. It's been a pleasure.